You're now listening to the Open Africa podcast with Laolu, Nosa, and Furo. On this episode, we will be discussing cards, breaking down different aspects of card payments, and then spend some time discussing crypto card payments, and then CBN eNaira. The last thing the other thing we'll discuss on this podcast episode. And as usual, expect us to ramble on about random things in the middle of it. So, cards. Where do we begin? So, does someone want to just walk us through, for a basic, like a primary school child, how cards work? Who wants to explain?
Nosa is the bank person here. I don't work in a bank anymore.
We all worked in a bank.
But you are still doing the work.
I didn't do cards.
I'm doing cards from a different angle.
A card is a payment instrument.
Mm-hmm.
As opposed to musical instrument. I don't understand.
No, so like, okay. Maybe.
Today, you walk into a supermarket, Nosa.
Yes.
And you pull out a card. First of all, how did you get that card and what can you do with it and how does that happen?
The person that gave you that card is your financial institution.
AKA card issuer.
Can a non-bank issue a card?
In partnership with a bank, yes.
So
That's
banks issue cards.
That's a co-branded bank card, yes. The only people that can issue cards are people that are members of the card scheme, and they are issuers. A card scheme is Visa, MasterCard, Verve,
Afrigo,
etc. So you have to be a member of the card scheme to get the right to issue that particular card. The card is essentially like a representation of your account.
For most cards.
Yeah, so it has like the number is like your identification number, and when you put it into the terminal, essentially, it's a complex chain, but a message is sent to your bank that this person with this card number wants to make this payment.
And this pin.
And this pin. So the bank now confirms if it is indeed the pin that you set. And they say confirm if you have enough money for the payment you're trying to make. If you have enough money, they say, yes, it's all good.
Honor that transaction.
Honor the transaction, exactly. So the merchant now gives you value because they saw success.
Okay. Just to add that, at least in Nigeria, I don't know what happens outside of Nigeria, but you can say that there are three types of cards: the debit card, the credit card, and the prepaid card. The difference between all of them is simple. The debit card sits on your account, your bank account.
Current or
savings account. When you spend on a debit card, a bank account in your name somewhere, provided you are not a criminal that has stolen somebody's card, but a bank account somewhere is debited and it goes through that complex chain until the final beneficiary, whether a business or whatever. A prepaid card, on the other hand, is separated from your bank account, but it has its own store of value. Yeah. So when you fund a prepaid card, right, let's say with 10,000 naira, you have 10,000 naira to spend, but your account has already been...
So the value on the prepaid card is stored on the card itself?
It's stored on the card itself, correct. And then a credit card is a loan, essentially. It allows you to spend money that you don't have on the premise that you are going to pay back at the agreed time. So those are three types of cards in Nigeria. I don't know if there are any more anywhere else. A virtual card is simply just a visual representation of any one of those three cards. It could be a virtual debit, virtual credit, or virtual prepaid card. So when you present a card at a POS terminal, I feel like we've gone through this before.
Yeah.
So let's not overflog it again. God, the explanation is long, but yeah.
So I think what's of more interesting me right now, I don't think we've spent time on any episode discussing this, is the card schemes and how they operate.
Okay. So obviously there's the big two card schemes, Visa and MasterCard. There are a couple, there's Discover, there's Amex, Union Pay. They are not as everywhere
As Visa and
as Visa and MasterCard. Now, essentially, the miracle that these guys have performed is that as long as they've gotten distribution to the level where as long as your card is Visa or MasterCard, you can make a payment anywhere. And they're essentially promising that merchant that they can get money from your account wherever it is in the world.
Unless your Nigerian bank has put limitations.
Yes, unless you're in Nigeria, which means they hate you. But the entire premise of it is that Visa can pull funds from your account and but Visa can guarantee that this payment is good for it and the merchant to get the money. So that's like both of them, that's the promise they make.
Yeah. Another thing to note about card schemes is that they set standards on card operations, right? For starters, you have to integrate with them to even be able to do anything.
Yeah.
Secondly, they have standards for things like chargebacks, disputes on cards. So somebody says he made a payment, he didn't receive value. They are very involved with like the whole arbitration and ensuring that people are what's the word?
Because now? I mean, they're the administrators of the scheme, for lack of a better term, right? So they know what happened on the issuer side and they know what happened on the acquirer side.
What does acquirer mean?
So acquirer is the person that is acquiring the payment. So like obviously there are two parts of the payment. There's you making the payment and there's the other person accepting the payment.
The person accepting the payment is on the acquirer side, and the acquirer might be a bank.
Yeah, so the acquirer is whatever it is that helps that merchant accept that payment. While the issuer is whatever it is that helps you, the civilian, make a payment.
Yeah. So basically that's what card schemes are.
So that's the card scheme. So like Verve is a local scheme, for instance.
Verve isn't Afrigo, is that a name?
Hey, don't call them local. Many years ago they did one payment inside one shop in New York and it was in the newspaper.
Oh my god.
Oh yes. I mean they are a local scheme, but they have partnerships that allow them facilitate international transactions. I think they do
Nosa speaking English
with Discover.
Wonderful.
But again, even Verve international transactions are not a thing that you are saying, because the person that can again, as part of the guarantee is that Visa and Co. So I'll give you an example why, say like your Apple Pay and I say Apple Pay, Apple Music and Co doesn't work, for instance. So Visa is guaranteeing that Apple will get their money, right? So when although it's listed in Naira, Visa is sending a bill to your bank in dollars. That's so they can settle Apple. So essentially, in our current FX crunch, all your banks have said we really don't have enough USD to be making this settlement, especially since they're not even making us any money. Like, I mean, they're making money, but they're not really making us money.
And they're not an essential thing.
And it's not an essential thing. So we're just going to stop your access to these things, and we'll tell Visa and MasterCard that, hey, we don't have it, so don't approve the transaction. So don't allow them to do it. So that's basically what's happening to you, and that's why you're all flocking to providers. But if you have a USD card, which is in Nigeria, so if you have a DOM account with USD, so that's what Paga does. If all the banks that have DOM accounts, they're essentially just taking your dollars and they're settling that transaction. It means the bank doesn't have to provide their own dollars. When the economy was good and things were bad, I said things were good. And things were good. The banks didn't have to worry about where they would get USD for, because dollars were swimming in dollars. Corruption was in power. But now that there's no more corruption, we're no more swimming in dollars.
Cheers. When I first when I first started in like commercial banking, to get dollars, it was I think I've said this before. It was a simple email to Treasury, like, oh, my client wants $200,000. Here is the form M, and in a few minutes they've credited the account USD. You make the payment through Swift. Everybody's happy. They go and clear their goods.
By the time this episode airs, we should be
in a new dispensation.
Hopefully, by the
Better
time we are
things to
listening to
come.
this, dollar is 500 naira.
Oh, by the
$1
way,
is not 500 naira by the time we are listening to it, and it's 1,000 naira. Well, we can do crypto.
this dollar bit on cards is actually a good segue into the other type of cards that some of our friends might have said, oh, we didn't mention, which is crypto cards. Nosa, do you want to tell us how crypto cards
a
work?
crypto card is not really different from like a regular. So, you know what's funny is that most crypto cards are prepaid cards.
Yeah.
So, but essentially how it works is you have crypto. Again, with payments, both sides have to be dealing in something that the other person wants to accept, that they value. So if you are bringing crypto to Chicken Republic, there's really no value in your crypto for Chicken Republic. So what they do now is they convert at the point of payment, they convert the value of your crypto to the fiat value. So maybe the value of the chickpeas that you're about to buy. And
Did I hear you say fiat?
yes,
Wow.
fiat.
So to do the payments with the crypto card, they still convert cryptocurrency to fiat.
Yes, because
Wow.
again,
Laolu.
Shocking. I never saw it coming.
nobody's getting settled in crypto.
I wonder why that is though.
They're getting settled in real money.
Could it be
While you degenerate like you are.
that volatility can finish your business? Oh my days. I'm sorry guys, I'll behave. But quick question on this crypto bit. Why don't they just use stable? I mean, time has shown us that stable coin is not really stable like that. But why not just replicate the rail for stable coins?
Because Chicken Republic is not accepting stable
Yeah,
coins.
Chicken Republic is not accepting stable coins. The fact of the matter
Wow. I wonder why.
Laolu gets us.
Could it be?
Now the future people are saying is that people should be able to trade in stable coins, knowing that this stable coin can be redeemed for cash, like at any point. So there's that confidence. It's kind of like NIP transactions, like your any instant payment you have. The money is not moving at that time, but they know that come tomorrow at settlement time, we can get this money from you. So it's the same thing with stable coins. Come tomorrow or come when you need to settle yourself, you can change the stable coin to real value. So that's kind of the future, but it's not quite
We're not
there
there
yet.
yet. Okay, my own, what's me I want to understand is coming from a completely different angle, right? So we have Visa, we have MasterCard. From a customer perspective, it's working. I'm able to do my transactions, they honor my transactions, etc. Why Afrigo?
As somebody who has recently seen the wickedness of Visa and MasterCard, let me tell you why we need Afrigo.
Please go ahead.
It's dollar, my dear.
Okay.
It's dollar.
So a little known things. I mean, if you are a trader or someone that has a POS or an online store, you've noticed that what you usually get settled is less some fees.
Yes.
Those fees that's in Nigeria we call it merchant service charge. Outside the world, in other places they call it interchange. But basically is the fee for processing that transaction, which is shared by everybody that helped facilitate that processing. Now that fee is charged in the currency of the transaction. So if you're doing a Nigerian thing, the split is in Naira. So the bank that issued the card gets a cut of that MSC and it's in Naira. The person that acquired the transaction gets a cut of that MSC, it's in Naira. And the different middlemen get their cut.
Gateway, the switch.
Now, Visa will charge you a flat fee as the scheme for processing, for like routing your transaction, because again,
A flat fee in USD.
in USD.
Correct.
So you get a fee in USD. Is they will charge you one, an authorization fee, and they'll charge you two, a settlement fee. An authorization fee is them getting confirmation that you authorize this transaction, and two is them having to settle the transaction.
Like they bill you for making an API call to your service.
Yes. So now those fees are outside MSC, right? Then the processors themselves also charge a fee. So the person that helps you issue cards and the person that helps you acquire transactions. So this, by you, I mean the bank. So you, a bank, there's an issuer processor that helps you issue cards. And there's an acquire processor that helps you acquire on the merchant side. They also charge you an authorization and settlement fee. Most times, it's in dollar. Except it's Verve, which would be Naira, because interest which did not try it. Now, the whole point of Africa is that we don't have dollar in this country. And
then also, like, it means that as exchange, because I don't think
exactly.
MasterCard change their
they
bank
don't really
rates.
care. They're just calling you this. They are like maybe 10 cents, 5 cents. They want their money in FX. The bill you're getting is in FX. Maybe you can negotiate, and maybe you pay them in Naira, and maybe open an account here. I mean, I don't know that far into this, but I'm going to say no. I don't believe that's happening.
I'm not even sure that it's an option
So
to pay in Naira.
interesting.
Oh no, some people pay in Naira.
Yeah, I'm saying some people can
But maybe
negotiate, especially if you are really big.
Yeah, if you are big
If you
enough.
are big enough, you can
I know for a
them,
fact that one of them
and you
has
can even
Naira.
open account for them and be paying their Naira in your bank.
Yeah.
But if you're a small, tiny new bank, you really don't have that option. It's not on the table for you.
So interesting.
So,
So
Afrigo is kind of us, the CBNs, and
taking ownership
and saying they have not overtly said it, but that is
The body language.
that is it. Is that the fees are expensive, and we're not the first. Indonesia is doing the same thing. Because also you see the thing that's happening with Russia and co. When the world blacklisted Russia, Visa and MasterCard has effectively stopped servicing them, and they had to go to work with Union Pay and RuPay and those alternative things. So there's also the angle of our sovereignty, etc., we should be in control of our own destiny. But the underlying thing is that FX that they're sending out of the country is coming from
is taking a hit. So then cards as a business, so like obviously as a financial services institution, you have your lending business, you have your I don't know, cash, I would say business, you have I don't know, you should have different business operations. Cards as a portion of your business, do you think that that's a profitable thing for banks?
It's not. On a purely cards perspective, issuing is not essentially profitable activity, because once you add the math, for instance, I think
You need
the person needs to spend on a single transaction. The only way you make enough interchange to cover your fees in a good exchange, like in the current exchange regime, is like I think 50k. Now 50k is not a regular day-to-day transaction, so it means you are taking a loss on many other transactions, and it's not as if this, like MSC is a percentage of the transaction. The scheme fees and the processor fees are flat fees, so regardless of how high, how low, it's not even, you don't pass it to customer, nothing.
Apart from these guys though, and I'm not even certain that I should be talking about this, but I think what's your name? InterSwitch does
A percentage.
a percentage.
So I mean, it will explain why Verve is a lot more popular. So if you know what
For lower
banks are very
tier
hesitant,
accounts.
yeah. So the way the banks see it, and the way anybody should see it, is cards are an acquisition tool, right? They are used to drive account activity. The more activity, you can give the person a loan, you can you can monetize the person elsewhere. Like your account becomes more sticky than. I mean, let's look at two things. Like I'll say something for like Kuda, for instance. Cards were very successful for Kuda because at the time we had cards, nobody else did when we started out. It wasn't a thing that was on the agenda. And don't even mention Alat. Alat is Wema Bank, so it doesn't count. So as far as issuing cards,
For fintech.
I wonder why they cut me. Why I wasn't going to say anything.
because people mention Alat all the time, and it's like I don't think people understand that Alat is literally Wema Bank.
Yeah.
But because it's such an extensive endeavor, like even MFBs to do it, because again, that's the only way you can drive stickiness. If it is, and it's not like now where transfers are more prevalent. Back then, paying with transfer wasn't a thing at point of sale. So if you wanted people to keep more, if you want people to keep
cash
money
on
with
card.
you need to have a way for them to spend that money that is accepted everywhere, and that's where the card is.
Sidebar, but we've actually come a long way on transfers as a point of sale rail, to the point where even payment gateways have it, and we've built infrastructure around it.
Leave my house without my card. Most of the time.
It wasn't
I haven't
always
used
like
the
that
card
because
since March.
even as of 2019 December, I was on a project that was taking me round Lagos talking to like key distributors and sub distributors for FMCGs, and we're trying to figure out like why because some of the issues that they had were easily solved either through like a POS terminal or by accepting transfers. We're trying to solve for cashless. And I found out that they were even more willing to accept POS, which they didn't like because of the T+1 settlement nature. They were even more willing to adopt POS than transfers. And fast forward to today, and does Glover Court still do shakara for
I haven't
transfers?
Because you see, the thing with cards is that when you put your thing in POS, the person that you're attending to, you get instant confirmation. Is either successful or it's not successful.
Correct.
Now with transfers, there's a different complexity of the different banks.
The confirmation doesn't come
as instant to the merchant or to the person that's making the sale at that point.
Yeah.
So it makes it a bit difficult. So in terms of hierarchy for payments, everybody's ideal is cash, because cash
Instant
is
value,
instant. You can confirm you receive it immediately.
Unless if they give you fake nairas, in which case, sorry.
Like new Naira notes.
I
Wow.
like the new. Anyways, no comment. I don't deal in cash.
I saw a new Naira note today and I thought it was fake money. But yeah. But again, so cash is because it's instant and you can confirm value like immediately. Card comes next. The settlement might not be instant, but the POS will print a receipt that says this transaction was successful. With transfer, you have to be checking someone's phone. Now, what if they don't get the SMS? Or what if they don't get the notification? SMS is delayed, the telco hasn't sent it immediately. So there's all those issues related to it, which has made them make it convenient. So a lot of the successes you are seeing now is from guys like Moneypoint putting transfer and Pocket and Call, these people doing transfer and instant confirmation, where you can print a receipt for a transfer payment.
Yeah. Like for us, for example, my employer has a gateway product. The transfer service is actually one of our most requested services, riding on that virtual account technology. And it's just because transfer as a point of sale rail has gained a lot of acceptance, which
And it's cheaper for
It's cheaper.
for the
It's
banks
cheaper.
as well.
It's cheaper. And it's cheaper for the merchant because
And
the
then-
cost of the transfer is borne by
The
the sender.
Yeah.
But interestingly, is it cards that requires a third-party processor by regulation? Or is it transfers? Because I know that, low-key, this direct routing thing that all of us are doing may not particularly be kosher.
So the reason why it's not kosher, and
I think it's transfers.
no, it's all payments.
It's all payments,
So
yeah.
payments are supposed to be routed through the central switch, right? Even POS
Yeah.
settlement nibs get a cut out of it, because
Correct.
both for sanity of the industry and whatnot, the regulator has said the central switch should have visibility into all transactions. When you do direct routing, you're cutting off the other
Central
people.
switch.
So it's not something they'll encourage you to do. They'll frown on it. A lot
Yeah.
of it is very untouchy.
Yeah. So I was saying that because one of the issues that we've experienced with cards, especially when you are looking at the merchant's perspective, is the fact that the settlement is not instant. So if I do a card transaction today, the person I'm paying won't get the value of that money in his bank account until maybe the next day, or in some cases 2-3 days after, because things happen on your processor side, on the gateway side, or on the POS side.
That's interesting.
So
But-
yeah, that happens.
But I think, well, I guess there's a lot of, transfers are preferable to cards, but I think that I know there's still some cases of like fraud around. Like if you're not using like a pocket or money point or whatever, that can confirm.
And you can send, so like fake receipts.
People will send fake transactions.
Fake transaction
and
receipts
stuff
to have been a
that.
thing since
Yeah.
COVID, for instance.
Yeah. Even before COVID, fake SMS alerts were a thing. Because one of the distributors that I was speaking to at the time said she had been defrauded before.
Yeah.
And she was telling us that there is nothing you guys want to say to me that will make me accept transfers. That the only people that she accepts transfers from
Are people she trusts.
not just trust, like she knows your house and she can walk into your, like she must know you.
So that's even why they ask you for like your phone number and stuff for like
Yeah.
supermarkets, because
Yeah.
in case it is a fake transfer, they can call you and
Yeah.
say, I mean, I
Yeah,
don't
but
know.
that's pretty
You
dumb,
can do
Sha,
fake
because
number.
if I intentionally do it, because I remember one time I asked someone and I was like, okay, so what happens if I give you a fake number now? And it's like his brain froze
because he didn't
because he
that.
hadn't dipped it to that extent before. But yeah, so Nosa is saying card business is like hard business. I can speak from a gateway perspective to say that the answer is it depends, and my perspective is different from Nosa's because Nosa is a bank, he's an issuer or an acquirer. Me, I'm just a processor sitting in the middle processing those payments. But I can tell you for free that based on our pricing, there are certain tiers of transactions that we take a loss on just because there is that flat fee to the scheme that we pay. And as responsible service providers, we have a fraud tool that we use for transaction because we like to be able to sleep well at night. We pay some guys and it's per transaction. So for every transaction that happens, we pay a fee to the fraud service provider to ensure that he can catch fraud. And if he doesn't catch fraud, then we can go and hold him and we vomit money back to us. So things like 1,000 naira, 2,000 naira, anything under that, I think even 2,500 is still a loss-making transaction for us. So in that sense, we would rather route you through other rails for certain prices. And to do our business, you then need to get really smart about how you route rails. And it's something that I think everybody is going to get to, where you're turning on and turning off rails based on the amount that is coming through. Another thing to note is that the pricing is super different, right? So interswitch is better for like local transactions, and smaller tickets.
Yeah.
You'll still make a loss after you pay all the things that you're supposed to pay, but it won't be as bad as if you were doing, say,
Visa or MasterCard.
So that's the thing with cards. But I can imagine how for banks, by the time you factor in card production, the logistics around card production, the sourcing of the card plastic, the alignment with the scheme, the distribution with the schemes, managing fraud, destroying cards, ATMs, and all of that. I can imagine how
ATMs are horrible.
So yeah, so an ATM,
I
ATM
can imagine how
difficult.
difficult that is.
So why cards is a difficult business is beyond the fees, there's complexity attached to the process, right? There are many parts of in a transaction. There are many participants in a transaction, and if you wanted to investigate a failure could happen at any of the different points. So a lot of this complexity is also priced into the service. Like now, doing a chargeback costs the bank money. It's not a fee that they pass to the customer, but they do a chargeback. Yeah, it might be cheaper if you do like a local transaction or you're routing, but there's still a fee to use, a cost that you don't do. So there's all that complexity. There's a special kind of knowledge needed, like a specific domain knowledge needed for even like card transaction reconciliation.
Yeah.
So there are like different like entries that passed into like your settlement account. It's not like a transfers. It's not like any other transaction.
Yeah.
There's a complexity of the reconciliation. There's a complexity of the security requirements, being like PCI certified.
Oh yeah.
How you store your card data,
card pan,
and whatnot, because it
thing.
is a representation of the person's account. Like it's not something you don't give out. It's because a card is essentially like free authorizations to charge an account, right? I mean, sure, there's PIN, but you don't have an equivalent of that for transfer, right? You have to do it with your app or do it something. It's a lot simpler. You can lose your card and you can lose money.
So to rephrase, what stands between your card and your money is a 4-digit PIN, because if I take possession of your card, all I need is that PIN and I have near unlimited access to
your account.
Unless
Whereas
you have like a transaction limit.
for phone, if I take your phone, I must first know your phone PIN. I must know the bank that you use. And when I then figure out the bank that you use, I must then, if it's USSD, I must know their number, then know your PIN before I can access it. And then, even then, it's capped at like, 20K. For the mobile app, I must, 2FA, or I'll know your alphanumeric password.
And user ID.
And then I would then know the transaction PIN again, which is different from what I used to log in. So just in terms of like safety.
So and it's easier for someone to just get started with a product that does transfers and all these things, because these are standard processes. Now, cards are a bit more difficult.
They're so complex.
Like even the messaging, for instance, is like it's like ISO messaging.
It's ISO.
It's not like it's not like standard like REST,
Request
like JSON,
request and response
kind of stuff that most technology companies are used to. So even finding people who understand ISO these are people in traditional banks. You don't find them in CCO.
Yeah.
Sidebar. I had one bright idea at some point for cards, so I commandeered developers to start doing the thing, and then they were making progress because it was NFC stuff, and then we hit ISO and everything hook. We now started looking for guys in card operations, and we're like, yeah, we'll just partner with a PTSP and keep it moving. But that's a real thing. It's not, you don't see, the API is not.
Yeah, so people have built out businesses out of making card integrations developer friendly, just so you understand the complexity associated with card. So all those things make it very difficult business. Like, it's very easy to say card business is good business on the internet if you only see one part. Like, if maybe you built an app and you're issuing cards, but you don't manage the sponsor bank relationship, nothing. You just have an API to create card, you have an API to cancel card, API to charge, all that kind of stuff. All the settlement activity does not sit with you. It's priced into the one-off fee that you pay. So in your mind, it's like, oh, this is an easy business. But the actual meat of the business, if you say you want to be an issuer, you want to get into it, it's very, very complex. Like, you need like big teams, the know-how that's required is
You can't just wake up and say you want to be a card product manager.
yeah, you can't just wake up and say you want to be a card product manager. Exactly.
Yeah. And another thing that
Somebody
people forget
gets right.
is that the card schemes are also near all powerful when it comes to these card things, because like they come down on you like they are regulators when things go wrong.
Because they're regulators in their own right.
In their own right, yeah. Because
you are a participant in the scheme. Like you are,
They grant you permission.
they grant you permission to participate. So
yeah.
you can't. For instance, I can't just wake up and be an issuer of a Visa card. I have to be a member now.
Because an example was when
To be a member, you can either be a principal member
or be sponsored
or be a sponsor, like an associate member. An associate member means someone that's a principal is kind of holding your hand into the meeting. There are many big Nigerian banks that are not principal members. Just so you understand, there are banks that sponsor other Nigerian banks in Nigeria.
Yeah.
So it's not a walk in the park.
It's not a walk in the park. Because I remember when the industry took a decision on NFC cards. So every card issued in Nigeria today is NFC enabled. The industry has just not turned on most people have not turned on the NFC rail on their terminals. But it's there. It exists. The infrastructure exists. We can do it today. But it was a thing, and I don't know to what extent Nigerian banks were carried along. It was just, to my understanding, I could be wrong, but what I heard was that it was a decision that came from the schemes.
Yeah, so
banks had stock of plastic, because the plastic that your card is bought separate from any other shenanigans that are happening. So banks had tons of plastic that they hadn't issued. Some people with inventory like 30,000
and
cards.
to destroy it.
Destroy. Many people got creative about it. So if your bank suddenly started doing free card, come and get free card, it's not necessarily because they like you like that. They just had inventory that they were going to destroy.
Because this was like maybe 5-7 years ago. I think 5. It's been a while. But Visa and MasterCard said all cards going forward must be NFC enabled.
Correct. And you have no choice.
And they set a deadline.
You have no choice.
This was going to be the global standard.
But then now we haven't switched it on.
So
we haven't switched it on.
I mean,
but I know that they are working on.
So you can use the NFC functionality on cards now. So the thing is, if you've ever been on the tube, for instance, right, and you tap your card on the tube, it lets you in, gives you value. You wake up in the middle of the morning, you see a charge on your account that came overnight. Now it's because there's a trust that we can charge you later. We will let you go and we can charge you later. If you don't have enough money, maybe you go into overdraft, you pay fees, but there's a trust in that thing. In Nigeria, we don't have that. So the banks are also wary of people tapping.
CBN even warned banks, from what I hear.
I think they have.
It is unconfirmed, but I hear that they told the banks that if you do NFC, there's all well and good. But
the liability sits with
you. I think they've also not been able to agree on the threshold.
On the threshold.
But I know for a fact that the CBN is working on the guide to contactless payments.
Yeah, so I think
hopefully that should come out this year.
They were trying to peg it with US.
Because I'm really excited about that. I think it's going to speed up.
Yeah. So that's why a lot of it's on the acquiring side. It's not really switched on because it's just not expected.
Look, even if we set a 2K threshold, the number of use cases, you turn every downfall. I mean, I know there's no incentive on the downfall side, for example, to do digital payments. But just think about it. I could literally just have a terminal and just pass it around in a bus and tap it.
So
faster than cash.
Faster
than cash.
You might remember Squad does tap to pay on their thing. Could also even does it, yeah. But it's not the tap to pay that you're used to. You have to enter your PIN.
Yeah.
Like it's not the tap and go. It's essentially just them using NFC to read your card and it flows through the regular thing. The expectation for tap to pay is literally tap it and go.
And authorization, yes. So that's why banks haven't turned it on, because no one wants to take that liability. And it's also because the fraud in the card space can be bloody. Look, we make jokes here about card fraud and all, but it's until when you see $30,000 worth of chargeback coming to you, and merchants has received value and it has gone, that you know that there's a
fraud problem.
It's a real thing.
So the thing, and that's another thing, is same thing with everybody that's launching a USD card product. Now, a USD card product right now, given our current climate, is
an invitation to treat for fraudsters.
Yeah, because there's all sorts of racket that's running. There's arbitrage games that people are playing, etc. That's why someone can go to a platform, request 1,000 cards because they want to round trip it. It has been, as long as we have this FX Wahala that we have, it will give rise to these kinds of games. So you end up with all these high chargeback issues, and it's like, and you are hearing of the fintechs that say they want to pass the penalties to the customers.
If you have insufficient balance,
if you have insufficient funds, we are going to charge you.
It's a very inelegant way of dealing with a problem. Because at the end of the day, passing on the cost to the customer is all well and good.
Was that in line with regulation?
It's not, but again, as you can see, these people aren't regulated.
Fair enough.
Nosa, please don't say it that way, because it then sounds like we are going to report them.
But they are not regulated. It doesn't.
They will tell you that they have partners that are regulated.
And again, as we've seen with all these things, with partners that are regulated, I remember vividly when NTARS happened, and they were doing the virtual accounts for the donations and whatnot. Most of those guys got shut down. Providers more or less killed their business because of the exposure. So just because the person that signed the contract was gingered and ready to close deal, does not mean that's how it's supposed to work. They are not regulated, so they'll pass those. So them passing the fees, even them charging. I mean, you are not supposed to charge over 1,000 naira for a card, for instance. I've seen people charge 2,000. I've seen people charge 3,000, and it's not like delivery. It is card issuing.
Pick up in your branch.
You don't charge more than 1,000 naira. It's a regulatory ceiling. Whether it's right or whether it's wrong, it is what it is.
You gotta negotiate your regulator if you change it.
The only cards that are over 1,000 naira are the private banking cards, and the argument there is
it's not the card that is.
It's not even the card that is 1,000 naira. It is charged as a membership for the thing, as a premium.
Correct.
But the card itself, when they are reporting it, they charge you 1,000 for the card. That the rest of it,
50
naira. That the rest of it was for privileges and whatnot. So again, just because the regulated businesses are doing certain things does not mean
it's allowed.
It's allowed. It is also because they are unregulated, and they also don't pose enough of a risk or to the general public, and that is why the CBN
at this point in time,
and that's why the CBN hasn't come down on them. But the day they pose a risk to the general public, they will get shut down,
or they will get a letter at least before they get shut down. You get one.
Unregulated.
Yeah.
Will you get letter?
No. So your issue, whoever your partner.
Oh, okay. Okay. Sorry.
Your partner will get notice now.
I mean, because look at it. Piggy Vest used to be called Piggy Bank. You're not allowed to call yourself a bank in Nigeria if you're not regulated by the CBN.
You know, the interesting new one is that your trade name and your CAC name cannot be materially different.
Yeah.
That's why these guys team up
said they are rebranding, but the CBN told them to change their name to Money Point.
Yeah. Okay. So, which then leads me to the question: if we get contactless, right, and we are building efficiencies around transfers, NIP, for example, you are obviously a huge fan of QR, but do we still need QR?
So I'll say this, that in an economy like ours, we are closer to Asia than we are to America.
On some things. On some things.
In fact, culturally, just because that we've suffered retarded growth and we haven't really grown as we should be. But in terms of our model, we're a bit late.
To be fair, you are right. Actually.
We're a bit late to development.
Southeast Asia.
Yeah, exactly. Southeast Asia.
Yeah.
We're a bit late to development versus these other guys. So these other guys, cards started from them. It was native. It was 100% native to their climate. It worked for culturally. It's embedded into the system. They know how to. There's opportunity to monetize card business. A lot of it, they know. Visa is an American company, for instance. Like a lot of these things just sit with them. These things are non-native to us, right? We are simply riding on Western rules for it. Now, QR has been very popular in Southeast Asia because it was their own thing. It's like, and it grew with them, so they kind of skipped past the whole cards there.
So that's the thing for me. That's why, for me, I feel like I don't know that QR is gonna pop here because the amount culturally and then
change management,
change of behavior.
So I don't think QR might pop here.
Yeah.
What I think will pop. And it's popping. It's transfers.
Yeah, and it's getting better, Nosa. I guess it's just taking a bit of time.
So the user experience might change and whatnot, but it's transfers.
Yeah.
And you see it because transfers are also popular in certain parts of like mainland Europe, like in the Netherlands, for instance. Transfers are a bigger payment method than cards. It's not a card. Paying with a card is odd.
Yeah.
In certain parts of Europe. They do account-to-account transfers. That's standard behavior, and it's something that's similar here.
Yeah,
and so it should be a thing where even if we get contactless, or before we even get finality on contactless, we have a solution that is contactless, which is transfers.
Yeah. It's just the UX of transfers is not as seamless as contactless.
But the thing is, like, how do I put it? Anyway, I think it depends on the threshold that they set, because I don't know that contactless will make such a big difference at point of sale.
Exactly.
Oh, don't forget that
transactions.
Point of sale in Nigeria, the average ticket size is actually quite small.
It's like 2.5.
Yeah, if not less. I know. Yeah, Furo. I spoke because I know you are using like Delis and Renee.
Please stop that.
And the Prince.
No, point of average.
But it's small.
It's like 2.5.
It's not even a slight to you. It's just what it
We're
is.
poor.
Even me, my own average ticket size is nowhere near 2.5. It's probably closer to 20K on average.
Yeah.
But the reason why I know that the average ticket size at point of sale is that small is because I know that the average account balance it's like 500 naira or something like that. So it's crazy. Another thing that is interesting is that because we are poor, for a large portion of our demography, cards actually don't make sense.
Yeah.
And they're expensive.
And take for example, issuing on wallets is the most ridiculous thing.
But that's why they issue Verve on wallets.
Yes, but even with the Verve, to do a withdrawal on an ATM terminal with a card issued on a wallet is about 100 naira. Because it's an MMO's card. So they charge them, and I think it's like 100 naira or so.
Now, in all of this, there's also a
USSD.
Forget USSD. There's the global chip shortage.
Yeah, there's also that.
That affects us materially. The cost of card plastic is 2 to 3x what it was in 2021. As the CBN limit is 1,000 naira, the cost of the plastic is like 3K, 2K, 3K.
Crazy.
So you're taking a loss at the point of issuing.
You're taking a loss at the point of issuing.
And your bet is that you'll make it back over the lifetime of that card, which is 5 years.
If the person is spending over 50K per transaction.
So there's
5 years.
There's a lot of incentive for you to push your customer to transfer.
Transfers.
And there's a lot of incentive for you to make the transfer experience better. Yeah. So that people are not requesting cards.
Fair enough. I think we have done a deep dive into cards, shall we just quickly touch on CBN eNaira, which is another means of transacting?
Please, there's nothing to touch on. The CBN have created a wonderful product. I will not be speaking about my regulator in derogatory terms.
IMF.
Thank you.
So the IMF wrote like an essay or something.
We will contest the contents of that report.
My friend, please.
I said my regulator does not issue useless products.
I didn't say the useless.
It wasn't surprising. It was expected. But at the same time,
my
it was
regulator,
surprising.
please, why are we doing 14K transactions
A month.
What's going on?
Exactly. I knew it was bad.
But you didn't know it was that bad.
The extent of it being bad surprised me.
Let me trip you. So CBN has how many staff? Like 8,000 or thereabouts, right?
The CBN has 8,000 staff.
Something like that. And they pay staff lunch allowance on the app. On eNaira, right? So inflow 8,000 transactions, outflow 16,000 transactions.
So that's the 14,000 a week.
I've not seen anything.
I'm shedding hot
I'm
tears.
just putting it out there.
So the numbers have been
Can we invite a member?
abysmal.
I'm
I'm not
joking.
doing
I'm
it.
joking.
Abysmal.
I'm joking.
And why it is so poor is because there was so much opportunity. Because in the paper they talk about how eNaira could have been used for remittance, which was described in the original in the original presentation on eNaira about how they wanted to do it in phase 2 was going to be remittance, and we haven't seen phase 2 yet. I mean, Flutterwave says they are using eNaira for send, but it's a lie.
They're in bed with their regulators. They're compliant with their regulators.
They send that money directly to my bank account. They don't send it to my eNaira wallet.
They're working with their regulators. They're working with their regulators
It
and
doesn't
ensuring that
even-
they're meeting customers.
It doesn't even pass my eNaira wallet. They don't even ask me for my wallet address at any point.
That's the thing. I don't even.
They ask me for my account number and my bank.
I don't think I ever signed up for eNaira.
I did because I put 100 naira and co because I
I
always tried
did because
these
I was
things.
part of the implementation team in the bank back then.
I think but that's when I was mentally checking out. So
Yeah, and then
was
I
done.
also tried to help out with a bit of like change management and like user education.
It's a waste of effort.
But there were some questions that they asked me that even back then in my mind I was like, please don't ask me this question. I'm in the same boat as you. I can't really answer these questions. But yeah, I don't think they took the most optimal decisions on that product. The first gaffe I think was using guide to bank charges on eNaira. I'm not sure that was the best decision because you've essentially created a competitor that has no compelling advantage over what already exists. So the work to change people is significant. 2, this initiative is being driven by a government that is not particularly on the best terms with the populace, because I remember a couple of people saying they just
don't
want
trust it.
yes, that why are they doing this? They just want to use my BVN and see what I'm spending, like
Which they can do
yams like
already.
that. They can already do it, to be honest, but it just goes to show that a different approach will have been necessary. And I do wish that they carried the FIs more along in the conceptual stage, because it doesn't look like they did. I know
it's not easy for a
one
central
deputy
bank to want to serve customers directly.
One deputy governor mentioned it in one event like this, and by the next time we'll hear about it, it was come and integrate. And then we're all running helter-skelter, trying to meet timelines and whatnot.
So there are other countries that have done similar things, like not CBDCs, but similar central bank initiated like endeavors.
Customer facing.
Yeah, so like Pix in Brazil is like by the Brazilian central bank. UPI in India is by like the Indian central bank. And I thought India would have been the best model for it, because in India, UPI is so everywhere. And just like how because eNaira transactions are free, UPI transactions are free. Payments as a business in India is not really a business like that. It's now what you build on top of payments that you make money from, which is what I thought the CBN would have copied and tried to do and get people to like the next level. But Yeah. Anyway, by the time you guys hear this, dollar probably 500 naira. We might have a new CBN governor, and perhaps there'll be some proclamation on the eNaira.
Yes. All right. Thank you all for listening. I feel like this was a deeply. I hope it was. I hope that for people listening to be an insightful episode, because actually we spent a lot of time breaking down stuff. So till the next episode, thank you for listening.